On September 15th, 2008, the world's most powerful currency came inches from its grave. Banks fell like dominoes, trillions vanished overnight. ATMs froze, people whispered, "Is our money still real?" For a moment, the unthinkable hovered in the air. What if the US dollar, the backbone of global trade, simply death? What actually happened that week? How close did we come to total collapse? And what stopped the fall? To understand that day, we need to rewind. The early 2000s looked unstoppable. American homes were piggy banks. Wall Street was a casino, and credit was infinite. But behind the glow of prosperity, debt was quietly poisoning the system. Banks repackaged bad loans into safe investments. Politicians promised growth forever, and when the housing bubble burst, the entire financial structure built on trust began to crack. By 2008, one bank's failure threatened the entire world economy. Lehman Brothers, to 158 years old, collapsed in a single morning. Its fall triggered panic across every screen, trading floor, and kitchen table. For a few terrifying hours, even Treasury officials didn't know if money itself still worked. Here's the part most people never understood. Our entire economy doesn't run on cash. It runs on confidence. Imagine a vast network of promises. Every dollar you hold is just a note of trust backed by the belief that someone else will accept it tomorrow. But in 2008, that belief evaporated. Banks stopped lending to each other. Overnight markets froze. Global trade slowed to a crawl. Think of it like a human body. Credit is the blood, and when the heart, the banking system, stopped pumping, the organs of global commerce began to die. Central banks worldwide faced a choice: inject life support or watch the system flatline. The US government unleashed emergency programs worth hundreds of billions. Interest rates were slashed to zero, and the Federal Reserve did something unprecedented. It printed money out of thin air to buy toxic assets. To many, it looked like saving the patient. To others, it looked like creating a new disease. The tension peaked on a Friday evening conference call. Treasury Secretary Hank Paulson, Federal Reserve Chair Ben Bernanke, and the heads of Wall Street's biggest banks were on the line. If they couldn't agree on a bailout by Monday morning, global credit would freeze completely. Every paycheck, every loan, every dollar tied to that system was at risk. The question wasn't just will Wall Street survive, it was will money itself still mean anything? By dawn, the Federal Reserve had committed to the largest rescue in US history. The government effectively said, "We will backstop everything." Confidence began to return, but at a cost. The dollar didn't collapse that day, but something else did. Faith in the system's honesty. From that point on, the line between capitalism and state control blurred. The market was no longer free. It was managed. In the months that followed, millions lost homes, jobs, and savings. Yet the same institutions that caused the crash were rescued. The Federal Reserve's balance sheet exploded from under $1 trillion to over $4 trillion. The era of easy money had begun. That rescue set the stage for today's inflation, massive government debt, and widening inequality. We didn't fix the system, we inflated it. We taught the world that when money dies, it can always be resurrected. As long as you print enough of it. The dollar survived 2008, but only because we traded long-term stability for short-term survival. Today, the same pressures, debt, speculation, and blind trust are still building. So the real question isn't what happened in 2008. It's when does the next collapse begin? What would you do if the system that guarantees your money simply stopped working tomorrow? Let's hear your thoughts below.